Hi, and welcome back to License for Success. And in this segment, we call it Knowledge is Power. But again, I want you to know that knowledge is not power. Implementing the knowledge is power, and that's the step that most people forget. Another saying I like for you to always remember is speed of implementation. So if you can remember, knowledge is power, implementing knowledge is really power, and speed of implementation, you'll be very successful. You don't have to be perfect. Get your work out there, get it going, move fast. This is a fast-paced world we live in today. Today we're going to talk about the Dodd-Frank Act. In every segment of Knowledge is Power, we want to teach you something about what's happening today in our industry, what's happening with the government, what's happening with money, and how you can utilize that, capitalize on that to your benefit to succeed. So I want you to get a little knowledge about the Dodd-Frank Act. The Dodd-Frank Act was thought up by the Obama administration back in 2009 and put into effect in June of 2010. And it's a big act, and really, it's not a guideline, it's a law. And the law is to protect the consumer, their primary residence, when they purchase a primary home, from not overpaying or borrowing too much money that they really can't afford. There's a lot more to it, but I just want to talk about that one part of it, which really affects us as real estate professionals, financial advisors, and builder developers. The Dodd-Frank Act protects the consumer from not being able to borrow on a no-income loan. No more option arms at 1% interest rates where they're borrowing way over what they really can afford, and 4 or 5 years later, they can't afford the property they're living in, and they lose their home, they lose the roof over their head. The government is protecting the consumer from not losing their home. It's only for primary residents, and but you still can get no income loans for investors, and that's the part that most of the industry doesn't understand or know yet, because these new products are coming back, and we're going to talk about that in a minute. As far as your primary residence, you have to qualify. You have to hit a debt-to-income ratio in order for you to get approved for that money. No underwriter is going to approve you for the funds unless you meet a debt-to-income ratio. Now, that debt-to-income ratio can vary from as low as 29% on the front end up to 45% on the front end, 60% depending on the type of loan product that you're going into, whether it's a paper loan or a non-QM product, but you must meet that debt ratio. There are two new products out today that allow a person that doesn't meet the debt-to-income ratio with their W-2s or tax returns to still qualify. And that is known as a bank statement loan or an asset-based lending loan. A bank statement loan is where we simply take the last 24 months of your bank statements for your business and personal accounts. We average out the deposits. We delete the sum of the debt, and then we create a debt-to-income ratio utilizing your bank statements. At that point, we don't even look at your tax returns or W-2s, and then you can get qualified for a primary residence utilizing a bank statement loan. Or an asset-based loan. An asset-based loan is where we utilize your liquid assets. So that would only be cash in a bank, 401k, IRA, stocks and bonds. We're not going to use real estate as an asset. It must be something that can be liquidated quickly, which would then be, again, I'll say it, cash in a bank, 401k, IRA, retirement account, or your stock and bond portfolio. So those are the ways around. You're not getting around the Dodd-Frank Act, you're qualifying for the Dodd-Frank Act. And we're going to talk a lot about those products individually on Knowledge is Power. So that's why it's very important for you to tune in every week to learn something new. So I just wanted you to get that little bit of knowledge, but we're going to really talk a lot more about this. And I understand that was one of Trump's main issues, is that he is going to, I don't know if he's going to delete the Dodd-Frank Act, but he's certainly going to work on getting it to where the general public for primary residents can borrow money a little easier in this country and still be protected. So now next, what I want to talk about is the no income verification loan. So no income is back. A lot of people don't know that or understand that. These products have been back since about 2012. The Dodd-Frank Act went into effect in June of 2010, and the industry realized a couple years later, hey, we're suffering. We're stifling the economy. We're not allowing our self-employed borrowers to borrow money to pull that equity out of their investment properties. It's locked in there, and they're not putting that money back into the economy. We have to do something. So they had the right idea based on creating the Dodd-Frank Act, but they didn't think far enough ahead that what it was going to do to the economy. So they started bringing back innovative loans for investors, non-owner occupied, 1 to 4 family dwellings, commercial properties, mixed use, um, so that an investor can buy a home and refi a home to pull out that equity. And that's on a no income verification loan. That's not a no doc loan, and I don't want you to get confused with that. We still need to see your assets. We still need to see your debts. We still need everything else that we normally get in a mortgage application. But we do not want to see, we do not want to see your W-2s, your tax returns, or any other income at all. Matter of fact, on the 1003 mortgage application, it's totally blank. We don't put anything in there. Credit check, appraisal, verification of assets, where's the money coming from for the deposit of the investment, which is called sourcing the funds. We have to make sure that that money is available and not borrowed from somewhere else, and you close. It's a great loan. We're helping a lot of people buy investment properties and grow their real estate portfolio. We're refinancing real estate portfolios and pulling that cash out to buy more properties. And so those loans do exist today for non-owner occupied and investment properties. So that's one of our key products today, no income loan, credit check, appraisal, and close. Give us a call if you need that product. Give us a call if you just want to learn more about that product. Get in touch with me to do a qualification based on your personal financial situation, and we'll certainly let you know exactly what we can do for you. So thanks for listening. That's our product of today. No income loans are back.